Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it the very same UTC. A really big shout out to everybody joining the stream live today, as well as all of you wonderful people that watch this on Catch Up. A special mention today as well for all of our fam that have joined us for the recovery program. We've met some really incredible people through this, and to be honest, I've always felt very blessed in this industry, and I do owe a lot of that to the wonderful crypto Birb. A lot of the people that I've met in the industry over the years have been thanks to him, and a lot of the members that we've met and people that have passed through, we've really met some exceptional people, some people that have fallen on some very hard times and made it all back, some people that are just going through their first real major drawdowns in the industry. And it's just been really interesting to be with you all on this journey. So we are obviously today on our All Request show, so we're going to make this time all about yourselves. Horace, how are we doing, my friend? Hey, when 100K, right? So it needs to work its way back to it now rather than the drop that we've been looking for a while. And a big shout out to everybody as well. Not all of the chats come through to me here, so apologies if I do miss some. If you aren't getting a message through, your best chance to do it, I think, is probably to ping it through on Twitter. All right. So what's the plan today? Well, I want to share with you my trade plans, my thoughts, build out on the information that we covered on Monday's show as well, and just look ahead to where these opportunities are starting to present themselves in the market, right? We've done a lot in the recovery shows recently about over trading, about waiting for these opportune moments to present themselves. And you know, that's all great, but unless we kind of action that and hold ourselves accountable for it, then basically all we're doing is playing around with charts, right? So we're going to start with Bitcoin today. Craigie boy, hello, mate. Great to have you with us. So we're going to start on Bitcoin today. We're going to take a look at ETH as well. I'm pretty sure Craigie boy will want a few eyes on Solana, maybe, but I don't want to obviously speak for you, my friend, but do know if there are any charts. I want to rip through some charts today, open forum, ask your questions. More than happy to answer anything, obviously, that's within my wheelhouse, and if it's not, I'll suggest the very best people that I know that's wheelhouse it is within. All right, so let's crack this down. I'm going to throw Solana on the list anyway. I'm going to front run you, Craigie boy, I think, but let's have a look. CRV Crypto, good morning to you too. Wrong person, but do really appreciate you taking your time to come onto the show and spread a little bit of toxicity. So always nice to see pathetic twats like you. Enjoy your miserable little life. There we go. Goodbye. Kalkman AA, good afternoon. There we go. Craigie boy, yes, straight in there with Solana. Fetch AI would be great. Yeah, sure. I love that because we've got the narrative putting itself as well. Don't be like that prat that just came on here, by the way. Look, the markets, it doesn't matter who you are. Don't be one of these weaselly little snotty idiots that goes around blaming everyone for your problems. First of all, he's got the wrong person. Secondly, you know, probably the same kind of twat that's looking at prediction markets and realizing that, you know, this obviously is a game that you are gambling on, right? You're betting on a load of outcomes that you're using strategic advantages to get to a conclusion that allows you to make more money than you lose, all right? So yeah, please do let me know in there. The only thing I won't tolerate on this show is toxicity and idiots, all right? But any other questions are incredibly welcome. This is an open forum and a safe place for people to discuss ideas like that. Yeah, I wish the market was as predictable as me. Yeah, I know exactly what you mean, mate. I definitely feel your pain. Right, so let's pop on here, have a look at what we've got going on today. let's get this a nice big full screen and start with Bitcoin. Right. So in terms of thoughts on the market, we're looking at the moment from a kind of broader perspective at the, obviously, tariffs are still a thing. The main kind of narrative affecting the markets at the moment, however, has obviously been the government shutdown and then looking for, this data to start coming in. All right. So why is that important? Well, obviously, when the markets are without data, it just means that more speculation starts to get priced in. All right. Speculation leads to uncertainty. We're now in the longest government shutdown. I know people will say, but it's over, BC. Yeah, but we still don't have all of the dates for everything confirmed, right? We need to remember today as well, Wednesday is the 19th of November, meaning that we do have FOMC tonight, which is going to be really, really interesting. Okay. Now, we had the unemployment claims jobs numbers coming yesterday. So just leading to the fact that they came in high, basically 219 was the previous. We didn't have a solid forecast, but 232 came in, meaning that the softness in the labor market, in the job market continues. All right. That's not the worst thing for risk assets historically. All right. But obviously, tonight is going to be very, very interesting. 7 p.m. if you're on London time or UTC like myself. We're going to get those meeting minutes for the FOMC. This is all about, there's no rate decision at the moment, right? This is purely about the tone of Powell here, whether he's leaning slightly more hawkish, whether he's leaning more dovish. I would imagine it's going to be relatively neutral, but it is going to be something that I think they're going to defend themselves for this December decision. All right. So, when we've looked on that, poly markets had been repricing quite aggressively on that, or all the, even like the Fed watch and stuff like that, for example, as well. So you just need to keep an eye on that at the moment, because there is a little bit of uncertainty creeping forward. Now, you might hear a lot of people talking about the AI bubble, for example, and the fact that we've got earnings coming up, including NVIDIA, and this can really kind of scare the market. All right. So often these things are priced in, meaning the market's just an incredibly efficient vehicle at getting this information priced in before we actually find out, or before we get the confirmed print. So it's all about looking at the preliminary data, or that's what it's about very often. Obviously, when you remove that data, you just bring in more uncertainty. And typically, the case starts to sell a little bit better into the masses, and you almost sometimes get this self-fulfilling prophecy where if you haven't got the data you need to support the bid, then, ultimately risk markets were slightly overinflated. The correction was very, very normal. So we're left here in a position whereby beta risk assets, on the very, very far end of the risk scale, like cryptocurrency, is just getting smashed because it's difficult to catch a bid at the moment while there is that uncertainty in the markets. All right. So what we're watching for now is all of this starting to grind its way back to normality. And now Thursday at the moment, unemployment claims are due. However, this is down as tentative. Obviously, we've had the unemployment claims come through on Tuesday. So again, you need to just check what's being forecast, what's looking forward. But what does look to be coming back is we've got average hourly earnings, non-farm employment change, unemployment rate, as well as the Philly Fed manufacturing index. Now, on the unemployment and earnings front, this is quite important because, again, more softness in the labor market means that the Fed are more likely to underpin the rate cut in December. Now, this is going to also be forward-looking. All right, we do have a lot of bullish news, certainly in my opinion, and in the opinions of people a lot smarter than me that look on the macroeconomic side, that, we do have the debt refinancing in the US, basically akin to kind of quantitative easing procedures, money printing, buyback of debt. We've got fiscal stimulus across Europe. China obviously have, been in that for some time now as well. The US kind of moves in to replace Fed Chair Powell in May next year. I believe Trump can actually get the new candidate in place as early as Q1 as a shadow chair, I think. Now, the talk on the street is that Trump is trying to have as much influence over the Federal Reserve as possible, trying to get someone, a very hawkish Fed chair, very dovish Fed chair in there, sorry, dovish being akin to bullish, hawkish being akin to bearish, ultimately looking to stimulate the economy more. And their battle then is making sure growth is stable, making sure inflation doesn't start to rise up too much whilst easing interest rates, to make the economic situation better for people, but also better for businesses. Then there's obviously the flood through of the tariff income that we're going to look at as well to see how that factors in. One thing to be aware of at the moment is the kind of developing situation with the Bank of Japan. Basically they've raised interest rates recently, which has been on the horizon for a while. This has a real impact on what's known as the carry trade in traditional markets, where you're borrowing, a low yielding currency to basically get a higher yielding one. People are kind of like basically borrowing the yen at like 1% and then using that to get 8% returns on some slightly more kind of risk-laden currencies. So with that kind of unwinding, there is expected to be an impact. The yen is a very, very important global currency, as well as looking at the impact that this could have on the Japanese markets, because ultimately they're going to need people to buy that debt, and the spike in like the 40-year bond and stuff like that has gone up quite a lot. So there's a big question on whether they're going to be able to factor all of that debt. So these are the kind of major headlines at the moment, and underneath that, all buried somewhere, is cryptocurrency. All right, so what do we do in these situations? It's all about being prepared, right? Being prepared in the market is everything. As an intraday trader, I wake up every morning, I completely and utterly absorb myself in the market to find out what information I can gather, what edge that information gives me, what I'm expecting. And then I set a trade plan, mark my levels, find the key intraday liquidity pools from either previous days, monthly highs, monthly lows, weekly highs, weekly lows, the key areas that I want to engage with the charts. So what I don't do is just start my trading session and go, there's a signature that looks nice, I'll just long that without context, right? Ultimately, this is a game of patience, whether you're doing it intraday, weekly, positionally, whether you're doing this as a fund with a 5 or 10-year time horizon. Patience comes into everything that we do. So patience and the art of being prepared, right? And it is an art because it takes a lot of discipline. Okay, so what we're going to run through today is we're going to really try and look at a lot of these charts basically naked. I know we've got the levels on here, but there are a lot of people that kind of, that we have open discussions with about these levels. The rule is that on the show, the levels that are marked, the trade plans, the setups, everything that we do, or that I do, is kept on here, and we review it twice a week, right? I only delete things off these charts on the live shows so that it helps keep accountable. It's a good way to practice. It's a good way, to make sure that you're not building bad habits, all right? So where are we? Let's just absolutely obliterate the charts today, shall we? What have we got? We got 45 minutes if we needed to just smash through some. So far, we got Bitcoin. I'm going to take a look at Bitcoin dominance as well. We're going to look at Ethereum, Solana, and FET. Now, on the traditional market side, obviously, we're going to look at the NASDAQ. We're going to look at the S&P 500. We're going to look at the DXY, and we're going to look at the volatility index as well, the VIX. So we can look and try and put together a plan for, okay, what can we get in terms of correlation here to show us that strength and capital is willing to rotate back into the crypto markets at that level of risk. So very, very simply, at the moment, all of the red stuff on the chart is basically irrelevant. Yeah, this was the last level. We were looking to hold support, but ultimately this was the consolidation that we've been targeting. So the key was to see strength within this consolidation and use what we assumed, would be strong buying power in here. Why would we assume that? Well, quite simply, we look at the market as it is, which is an auction, and we're looking for the areas that the buyers stepped in and, ultimately control that part of the auction, sent price higher. So out of balance or expansion, back into balance or consolidation, more expansion, failed auction, just meaning that the price failed to get acceptance up there. So think about starting an auction and what you're asking for is too high. So this is, I'd say, let's call it 112, right? So 112, you're asking 112,000 for a Bitcoin, and you're looking across this broad horizon that's just full of bidders with their paddles silent. So what does that mean? Well, it means it's not getting acceptance there. So what does the auctioneer have to do? It has to offer this at a lower price, 110,000, 109. And what we see here is you do get some interest here, but ultimately not enough. Price continues to come back down. And that's why we target these prior consolidations, right? Because these are the kind of areas that we want to see if price holds. Yeah. Ultimately, this is a level that's been accepted as fair value, and price isn't getting auctioned lower than this, meaning that buyers are stepping in. Somebody got an insane bid down there at that point because, you know, the market went down. There was such strong buying, or there was so much in terms of passive orders down here, that's orders in the order book, as well as aggressive buyers stepping in, that price ultimately came up, set a new area of balance here. But then look at that expansion. Now we can see a much larger range in the form up here, right? But just to give you a little bit of context around what we're looking for within that, we're looking for these areas of supply and demand, as well as order blocks, as well as inefficiencies that are left in the market, also known as fair value gaps. And that's going to be the basis for the information that we're going to look at today. All right. And even within this, looking at this consolidation, if you're moving this across here, yeah, look at the interplay that it had. This was the area where price caught that incredible bid after that massive flush, almost half of that getting bought back up. It didn't have enough strength. Ultimately, the buyers weren't willing to step in beyond that. Price broke down again. We got this area of choppiness, which you see sometimes in these really uncertain conditions. Ultimately, price then selling off. But look how price held this area so well. You know, think of it like this. Sometimes it helps to think of the market as, rather than a collection of people, as one monster player. Yeah. So let's say back here, you just got this absolute behemoth. Hey, Erica, Gibril Master, how we doing, guys? Good to see you. Yeah. So what you've got down here is just one monster player who is just wants to just keep, think of it as like Michael Saylor, right? Just keeps buying Bitcoin aggressively, right? Keeps buying it again here. Well, what often happens with this is when those levels are then lost. Yeah. Anytime that you get these little pullbacks, it gives these people the opportunity to get out of position, to hedge, obviously to cover, yeah, and then either start to take the trade in the opposite direction or close out or remove those bids, yeah, meaning that, you know, remove the asks, but remove it from here, meaning that you're basically removing that resistance and then price drops. Okay. So the plan was really, really simple. That was just to give it some context. This is the consolidation I'm really interested in, because what I'm not massively keen for is just this really thin move here and the fact that we never really retested this area. If we zoom out onto the weekly chart, yeah, well, what we can see here is this is the key area of demand. This was the consolidation, price swept liquidity, fast expansion, no retest. So I'd love to see the bodies here tapped into. This is around about 86,000. All right, so do check that, whichever exchange you are trading with. Okay, but this is around about 86K. So yeah, I mean, really, really simple for me. I'm not really looking to take any longs here because we're just kind of hanging around no man's land, or no person's land would be more accurate. I think an early sign of recovery for me would be price kind of stepping back into this area here, because in doing so, we would also now need to close above this daily candle. All right, so price reacting nicely at this gap here, this inefficiency, this fair value gap, if you like. What we want to see is a fast expansion above. I mean, the real dream scenario here is this, to be honest, for an early stage recovery. Consolidation before we saw that flush, we took out liquidity below this low. Obviously, we're reacting within the inefficiency that we can see to the left. So the market's now rebalancing that inefficiency. There weren't a lot of transactions that took place here. That's why we get these gaps, right? So an early stage for me would be to see this, yeah. But I'd probably consider a little nibble here, just based on the fact that we would be kind of showing strength, not in the middle of nowhere, but in an inefficiency. And often you want to see these kind of areas of consolidation tested into. But if we did see that, then it could just be the fact that buyers really are stepping in here, or sellers are stepping away. But ultimately, you know, the aggression of one party is overtaking the other. So that would be an early stage there. I would, again, really be looking to pyramid in here. I'd be looking to build intraday positions that I would then look to turn into maybe longer term swings, which has actually been working out quite nicely in these market conditions, right? Then this really, for me, is the key one. And I know it just looks like your typical kind of staircase pattern that you're getting here, but it's very, very true. And it's, you know, the real concept of trading level to level. All right. So as we're looking at this here, comes up, recovers this first area. Whether you're willing to take trades here or not, I think this is going to ultimately be an interesting area if we do just see this recovery. Obviously, in truth, from spot perspectives and everything else, this is the play that I'm most interested in, because this is where my limit orders are set down here. All right, this is why I'm happy to accumulate quite a lot more Bitcoin, to be honest. I think these prices are, I wouldn't say ridiculous, but, you know, I can't really see Bitcoin going anywhere now. You look at the mass adoption of it. You look at the serious players that now all have this on the balance sheet, the ETFs, etc. Just think it's just getting smashed as a very risky risk asset, right? So that's where I'm looking to be a spot player, right? But above here, this is where I'd look to take some trades, you know, with a little bit of leverage. Again, please do really be careful with leverage. Most people I speak to do not know how to use it. It doesn't just mean that if you've got $1,000 in your account, all of a sudden, if you 100x it, you've got $100,000. I mean, technically it does mean that, as long as you can meet the margin, but that's not how you should be using it. You should be setting yourself a fixed amount of risk and then using leverage to attain that risk level, right? That's what you're doing. You're also doing that to protect not having to keep all of your funds on an exchange, as we've seen, you know, many horror stories for that. And look, I know a lot of the major exchanges, some of the minor exchanges as well, and I know there's lots and lots of really exceptionally good people all working to make these places the best they can be. There's bad actors everywhere in everything, of course there are, but ultimately, you know, it just makes sense to not keep your money on those exchanges, right? Protect whatever you can. That's where leverage can really help you. If you keep screwing yourself over with leverage, just stop using it. All right. And then you remove that opportunity. There's nothing wrong with building this. Look, just remember that financial rewards from trading are just completely a byproduct of successful trading systems, good discipline, good education, right? You're not just going to turn up to the market one day with some money, just throw it in and get rich. A very, very small percentage of people will, but that's really damaging in itself, because, you know, you won't be able to repeat that then. So when you do get wiped out, you'll try to keep doing the wrong things again and ultimately end up in this downwards death spiral. Right, and I got right in there actually, didn't I, Craigie boy? So it was all right. There's something else you've been after recently as well. I can't remember exactly what it was, but guys, ladies, gents, everyone, right? Please do let me know if you've got any other tickers. We're just about to finish up here on Bitcoin, and we're going to do Bitcoin Dominus, Ethereum, Solana, Fetch AI. We're going to cover briefly into the NASDAQ, the S&P 500, the dollar index, and the volatility index as well. Just collect my thoughts on what I think we want to see from those. So the plan's really simple here. When we made this move higher, by the way, and we knew that we had this gigantic liquidity pool here and here, this is where we were looking to short this, right? Because we wanted to see this area break down and close below. We had that real unfortunate point that price did just run straight into that, had that reaction. Then price broke down into here. Another area, to be honest, I'm a lot more comfortable looking to position for longs than shorts. But as soon as we closed out of here, shorts were back on. So, you know, a nice and unfortunate flush to the start of Tuesday. Are you streaming from an ultra wide? No, I'm not actually, mate. I just can't get my head around them, really. I'm not an overly complex creature, you know, for a traditional market trader anyway. I just have 4 main screens and a central screen. But yeah, never got my head around the ultra wides, and it's just how they project onto the screen as well. It just makes it a little bit too small and thin, but they do look pretty sick, to be honest. So this is still an area of interest. Why? Because this is where sellers took control of the market. Buyers tried to step in here in this low really, really beautifully. You can see the absorption from the wicks to the downside here. But ultimately what happened is price pushed up here, couldn't capitalize on that, just tickled into this inefficiency here, this FVG, and then we broke down. All right. So this is a really key area of interest for me. If we show some strength and we look to start building back up here, I think stepping in back above the low 98,133 and then into this consolidation that starts around about 101,285. Okay. So very, very simple. If I was looking to play this on the 4 hour, and I'm not, by the way, because the daily plan is so clean, and the 4 hour has, you know, it's been decent, but, you know, basing it around the daily has definitely been a lot better. We've seen the first real attempt from price here, right, which I do quite like on the 4 hour. So let me just get rid of this and this, right. I don't like the weakness it's shown here, rejecting this gap, right, and also kind of driving up into this consolidation. But what I would say is we've had this flush out now. The problem is we've not really taken any direct liquidity, because I would be looking at this consolidation here, providing the breaker. And it is holding at the moment quite nicely. But it's not really a breaker in a traditional sense, certainly not how I use them, because it would be something like this, the up close candles here. So this bullish move, this push higher, sweep of liquidity, fast reclaim, meaning that these buyers that were here were caught offside very clearly, but the sellers that then came in got absorbed, pushed price higher, leaving the buyers back on side, making the sellers offside, showing strength where there was expected weakness, and therefore forcing market participants to close out their positions here or cover, hedging, meaning taking the trade the other way. And then we get that nice expansion. So this isn't really textbook perfect because, the sweep of this would have been over here. There's probably some low over here somewhere, right? But again, not overly clean. But we are reacting at the inefficiency. I think as price came up to here on a lower time frame, these areas can be of interest to, to look for long setups. But like I say, if we really, and you always do in a lot of ways want to look at the higher time frame. If you've got a really clear setup on the daily, I would just pay attention to the daily more than trying to force it on a lower time frame. All right. Arta, hello, mate. FOMC. Yeah, look, it's all about Powell's tone, right? How hawkish, how dovish he is. If you remember last time he came on, so hawkish and dovish, for those that don't know, and I did say it earlier, but people are joining this a little bit later, is hawkish is akin to being bearish, dovish is akin to being bullish. So, for example, he might come out and say this would be the best case scenario for risk markets, would be we're seeing continued softness in the labour market. I imagine they're going to report on that because they're the latest statistics that we have after a kind of drought of statistics, which underpins the Federal Reserve's plan to keep to the rate cutting schedule for 2025, right? Which means one more in December, another 25 basis point cut. However, moving into 2026, I think he's going to throw a little bit more shade on that because they need to understand more of the data. They've got a really good excuse, and I don't want to say any excuse. I think it's a really, really difficult job that they do, by the way. I don't think that any major government do it overly well, but I think, Powell probably does come in for a lot of criticism, especially obviously from Trump. But if you look at it, their job is to make sure that the economy's healthy, that growth is sustained and stable, that inflation remains low, and that ultimately interest rates kind of balance that whole thing out. But ideally, you want relatively low interest rates as well. If inflation's rising, it's one of the most suicidal things for any economy to be cutting interest rates into an inflationary environment. You just don't do that, right? There's kind of like whatever investing or Fed 101 or any country's 101, right? In terms of when it comes to interest rates, and interest rates do really kind of dictate a lot of monetary policy and how the world works. So what I would be looking out for is, any kind of overly hawkish statements. So, for example, him saying soft labour market, we're going to stick to our plan in December. However, we are probably going to have to look to revise our thoughts on further cuts in 2026. That would be bad news for risk markets, and you would see things like the NASDAQ, the S&P 500 start to pull back, and normally you see the dollar start to increase as the safe haven bid, as well as other safe haven, currencies, yen, bits and pieces, although that's a very different story at the moment, obviously, as we're seeing with the Japan rate cuts. But that's the kind of process that we're looking at in here, all right? So just adjust that, otherwise it's going to drive me nuts. So obviously, if he's overly dovish and says things like the economy's really healthy, the data we're getting is really good, we're really looking to stick to the plan of rate cuts. We might even be able to bring rates down further if we see X, Y, and Z happen. By the way, I think that's under 1% that happens. But just watch for the tone at the moment because there's no actual interest rate decision. Yeah. So if we look at poly markets today, for example, how many Fed rate cuts in 2025? Yeah. Then you've got, where's 3 basis point cuts has gone to 52%, and 2 basis point cuts, so meaning 50 basis points over, so 2 cuts meaning 50 basis points is priced in at 47%, which is down 8%. 3 cuts at 75 basis points, each cut being looked at as 25 basis points, is at 52%. So they're really split between them. 4 and 5 are basically off the table at 2 and 1% respectively. I know I'm not showing this, by the way, guys, just so you're aware. And then, so that really does affect it, because if Powell comes out now and says there won't be any, then you can see how that can really kind of skew the market expectation. So we do want to kind of keep an eye on that. Ultimately, at the moment, it really is a technical analyst's market because, the delivery has been so very clean. When, this consolidation here, for example, as soon as you realize that this is ranging, then this was ping-ponging around in the range quite nicely till we lost it. We retested it, created this. We got the breakdown from here to here. We're now losing these key levels because we're not seeing strength move into the market. So sometimes it's good to kind of narrow focus a little bit. Try not to worry too much about the fear mongering and what's going on. Look at how the markets are reacting. We're going to take a look at traditional markets in a moment with the NASDAQ, the S&P 500 as well, see what the dollar index is doing and the volatility index. That's going to give us a little bit more information that we can plug in as well. You're very welcome, Arta. No, I was asking because you have a big bezel in. I don't even know what that means, Horace. Should fix OBS later. It's not actually OBS. I did use OBS for a while. This is set up through TBN, but yeah, please do hit me up. You've got me in the Discord, right? Let me know if this isn't showing right and what is bad about it, and also what a big bezel is in full screen mode. I'm not a technological person, right? I'm not going to lie to you. I'm not in this for the tech, right? I'm a trader. Started as an analyst, became a trader, and my passion is the charts. I understand a great deal about crypto because of the exposure that I've had to this industry, but as a technical person, I was probably just born a little bit too late for the paper trading era, in truth. Right, so this is the plan on Bitcoin. Really simple, all right? While we're below this, yes, the box is green. Let me change that to red for, right? That was showing that we've lost that box. We've retested it. We're now selling off. Unless we get a pretty quick reclaim back within here, yeah, showing that really this is a deviation of this. Price is now willing to step back in. Then I'm looking to get a little bit bullish here, like I say, and then down here is around about, obviously, layering these in down to this level, even a little bit below, are a host of limit orders that are ready to gobble up some more Bitcoin to add to my long-term portfolio. All right, so let's take a quick look at BTC dominance, because we got a real nice pullback in this yesterday. My dear friend and wonderful trader, a guy called Just Pitt, who, again, one of the most underrated traders in the space, in my opinion, is absolutely mad for this. And every time I see Bitcoin dominance doing anything, I think of him and my other bro, Trading Tank, right? So, these guys are mad alt players, by the way, and they read this stuff like a book. For me, I'm a simple creature, right? So I'm thinking weakness in this is normally good for alts. Obviously, the conditions have to align. Alts are just getting absolutely smashed at the moment. We did see, obviously, just to show you, this is a small list that I keep on here, right? And just an absolute sea of red, while we are seeing green across the indexes. And yesterday, we can see, because they haven't opened yet, the equity markets, the Magnificent Seven taking a pummeling, meaning that that's why we saw that real downturn in the indexes. And while risk markets like that are taking a hit, it's really, really difficult for crypto to stand up. Although a few did yesterday. It was funny to see the kind of interplay of that correlation as the NASDAQ was starting to pull back. That's obviously the most tech-laden index that we have, along with the S&P 500, while crypto started to kind of catch a bid. So ultimately, some things were getting to some interesting levels that investors were happy to have a nibble at some. Again, I do want to reiterate that these market conditions for me are all about a flight to quality. It's very much like, I think if you are somebody that's traded traditional markets in your life, I think this is why these market conditions have suited me so well. You just have to understand what you can trade, when you can trade it. And ultimately, we've come from an industry where altcoins and that you could basically throw a dart, a list of names on the board and make money in previous alt seasons. That's not to discredit anybody that did or didn't, because it still takes a lot to understand the projects that are going to run hot. It takes a lot to hold those projects with conviction and to also to sell them for any kind of profit. Most people do round trip those investments expecting just that greed for more and more and more. But in these market conditions, you have to understand those companies that have the opportunity to stand out, understand the narratives that are driving the market. We saw some unbelievable plays, XMR, for example, which my wonderful head of fundamental analysis, KZM, was informing me about, and has been for a while, just the strength of that, because it's just, true security in crypto, and that's been doing really, really well. So that's been an outlier. People talking about Zcash, sort of standing up to that. My understanding of it is fundamentally it really doesn't hold a candle to it. So we saw that kind of have that big pump, a little bit of a kind of Ponzi pump, and then a lot of that kind of getting retraced. So that doesn't actually have the strength for me. We've looked deep into the rest of the securities market and just see that XMR as a real outlier, something that's just got too much about it to just be getting completely crippled in this environment. You can use some really cool things, by the way, as well to check these out. So let me just, before we run through everything that we're going to take a look at, let me share this with you. You can, there's other places you can check this out as well, but just get yourself onto the Birb Nest website. All right, as we can see here, this is just the Birb Nest website. You can see everything from our call stats. These are all the trading team calls that are taken in real time with members. all of the management of those calls, they're the results from that. They're all printed, whether it's win, loss, whether there's a, an average month, whether there's an exceptional month, they're all print and you can all check them. We've had loads of people join the Discord, which has been hilarious, to just try and catch us out on this and be like, you're not making it. And no one's been able to complain so far. So by all means, come and take the challenge, right? Resources, this is amazing. I love this piece, especially if you're new to trading, right? Resources Hub is great. The free newsletter is really good. So much work and effort goes into this, and obviously free. Who doesn't love some free alpha? Infographics is a mess. If you're new to trading, especially just coming on here and understand these things, maybe you're wondering about candle formations, right? Maybe you're wondering about divergences, okay, and how you play those. What are you looking at in just general open interest price analysis rules for anybody that's trying to learn that? These things were really great for me when I was starting out, and believe me, they weren't this good and they weren't this plentiful, right? They really, really weren't. But there's tons in there to learn from. Again, you can just get that all through the website. Now, this is what I just wanted to show you here, because we do have like the crypto screener. This is super, super useful, right? So look, this has been telling you to basically buy ZEC. I wouldn't say buy it now as well, by the way. I'm going to show you how I really make this work for me. But look at all the red across the board. You can still see some of these outliers. All right, this takes into account the weekly, daily, and 4-hour in terms of whether it's bullish or bearish, using a number of different indicators, including the Birb Pro, right? And what I'm interested in are things like this, right? When we start to see now the weekly being bullish here, yeah, the daily and the 4-hour being bearish, it's telling us that the lower time frames are still bearish, right? So either this is going to drag the weekly bearish, all right, and not give us opportunities. But if we see the daily start to pop bullish as well, then the 4-hour bearishness could be that pullback or providing us that opportunity to run, all right? Where something like XPL, for example, I'm thinking this is bearish. The 4-hour bullishness is most likely price pumping to a key liquidity level and then providing shorting opportunities. You can also see the real kind of kicker that these is getting. And then uni, which is holding up nicely, weekly bullish, daily now flip bullish. We got the bearish 4-hour. So if we start to see that resurgence there, that can give us some opportunities. All of this again is provided for free. And we've got the economic calendar on here as well. So you can see all the key news events, keep yourself in touch with what's going on in the markets. But this is what I really wanted to show you. We've got these for crypto and we've got this for traditional markets as well, right? Legacy markets. Now, just looking at this, you can get a snapshot here of what's going on in the crypto market. You can see some things starting to just flick themselves back green, but we're still kind of overwhelmed really in a sea of red. But what it allows us to do is look at the real outliers here and kind of see, is there a narrative that's starting to resurge? Is there a particular sector that's starting to get some, some eyes on it and starting to get some rebounds? And then you can be a little bit selective, all right? So just wanted to share that. Again, it doesn't cost you anything, right? Just go and make the most of free resources when you find them. And if you don't like it, just don't use it. Really, really simple. Right, so back to Bitcoin dominance. Just going to finish up on here. Oh, Arthur, sorry, mate, I didn't see your message there. Can NVIDIA make a mess tonight with the data release? So, well, if we look at NVIDIA quickly, well, just to finish up on BTCD, and what Arthur mentions here does really play into to what we're discussing. So as we look here at Bitcoin dominance, this is just moving lower. It just means that, you're seeing the potential for capital to rotate here into altcoins. This is showing weakness against the altcoin market. So this is what we kind of want to look at here. And obviously, look, if you do something like this, I know I show this on every show, but there's new people in that as well. Just go up here where you got the ticker. This is BTCD. Look at the little plus symbol here. Yeah, so just do this and then add something like Ethereum. Just add it on a new price scale. Yeah, and you can just see, look, Bitcoin dominance dropping like a stone, price of Ethereum going up nicely. A little bit of choppiness around here, mirrored here as well. And then when we really start to see the strength come in, especially after this spike, we can really see price of Ethereum really going off a cliff as we start to see this. But ultimately what we're seeing at the moment is with Bitcoin dominance dropping, as we saw this initial drop here, yeah, this initial drop just in here, we see price start to have that spike. Then we got the consolidation looking for that carry through, and price is now dropping aligned with Bitcoin dominance. Just ultimately, it's just signaling me that the crypto markets are still very weak at the moment. So we just need to show a bit of extra caution. Right, so NVIDIA. Just take a look at this here. Let me just hide these. Right, so can NVIDIA spoil the party? Well, Let's take a look. Looking on the chart, you can see here, date Wednesday, 19th of November. All right. Estimated earnings 1.255. Yeah, revenue estimate 54.9 billion. Now, what we need to understand here is that Nvidia have been exceeding their earnings, right? For people that talk to you about bubbles, just if you study historical bubbles, Asian tigers, for example, Japanese housing crash, obviously the dot-com bubble. And again, I know I mentioned this Monday and I mentioned this a lot, but it is a very key point and it is my opinion. It doesn't mean that it's fact by any means, but from what I've studied and the data is true, historically, those bubbles, what they have in common is they were very debt fueled, over extended valuations on a lot of companies, especially with the dot-com bubble, that weren't generating any revenue at all. What we've got here is slightly different because this is a lot of the investment that's going into AI, even though it's huge amounts of money, is capital expenditure. You'll hear it mentioned as CapEx, right? So this is being fueled a lot by, you know, company profits going in to reinvesting in this, the same way that you would do stock buybacks, for example. So people are just, they're looking for weakness in these at the moment. So if Nvidia, for example, hit earnings or just come slightly above it, then I think that could still have a little bit of a negative impact short term, right? I think the market's almost in a position now where its expectation is for Nvidia to exceed earnings. So definitely put an eye on that. And Artie, you're absolutely right. Nvidia could make a massive mess with the earnings print, because if this does disappoint, then the disappointment's to the downside, and ultimately Nvidia is really propping up along with the rest of the Magnificent Seven. That's what you'll see in the in my Mag 7 pile over here. It's Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And these make up a devastatingly high amount of the indexes, right, in terms of their performance. I think about 33 to 37%. So if these really take a hit, then, you know, the S&P 500, the NASDAQ is going to take a hit as well. And if risk markets are taking that hit, then you can bet that crypto is. Maybe one day we see this digital gold come out from Bitcoin where risk markets start to plummet and then people see Bitcoin as that hedge, but that hasn't happened yet, in my opinion. But what I do like about this is Nvidia's at a really nice level here. You might think, shut up, BC, we're not trading Nvidia, but you should be taking time to learn these things, right? They're really, really important. So as we look at the market here, right, we can see this whole period through here that prices wasn't able to get past it. Then what happened? We see this expansion. This is why I talk to people about really looking for momentum, right? When you see these moves, price coming in, really understand where the absorption's happening, right? Where these wicks are coming in and price just can't get above it. Then what you start to see is, you know, the first move in here, the second move, then the breakthrough. If you look at the way it's setting these higher lows as it's coming in, each pullback is getting shallower and the expansion getting more aggressive. Just a sign that you're seeing the buyers take control of the market. This is basically, at one point, was obviously just a huge wall of passive orders here. So the market order just being sold every time it's coming up, aggressive participants into passive sellers, those sellers winning the battle. Basically, it's just chipping away at this, what seemed like an endless pool of liquidity, meaning that prices kept rejecting to the downside. Then when this was taken above, remember that premise of an auction, right? Now price is discovering new territory. Ultimately, this was the price that you just couldn't get above. Yeah, for Nvidia, 184.48, 184.5, call it. And then when we saw that move high, look how price then couldn't get back below this. So for me, as long as we don't see something ridiculous, yeah, from Nvidia, and we can see here pre-market price is higher, so price is already down. So let's take a look to see how we get that rebound. This is going to be, you know, out of market speculation. So if this doesn't disappoint, then we could see a rebound here. And if that is the case, I would be looking for something like this, and then a reclaim of this area quite strong. And then I think that's a great positioning area here. You know, obviously it could just completely retrace, could gap up, even if the market expectation is, you know, basically the preliminary data and what's been leaked out, you know, shows that this is actually a lot of concern about nothing, because earnings have really come in strong. Then we could see that gap up and price really start to run. Then ultimately that will be good for the indexes. May as well just cover these off very quickly while we're here. All right. So like, yes. I'm just going to leave the arrow on the things just for some intraday trades that we were taking, right? But ultimately, we're at a very similar situation here. Maybe not quite as clean, right? Because of this bit here, right? But I would say if you were looking at this, it is a big area here. But I would probably look at something like that, actually. This wasn't the cleanest. It did run away a little bit hot, but if you're looking at a key point of rejection through here, supported price here, supported price here. So maybe a slightly lower run down into this. If not, then we want to see this, start to reclaim, as it's starting to do here, some key lows, just to show that liquidity has been taken below this, and then price is looking to ultimately move higher. So watch out for the index as well. These obviously tell us a lot. We can see the pressure that's being put onto risk markets in the moment. So ultimately that's flushing through into cryptocurrency. The NASDAQ is basically the same. So I know we don't exactly have a heavy traditional market crew here. So I'll move on to the DXY. These are the ranges that have served us so very well for so many years now on the DXY. Ultimately, we deviated the range here, stepped back below, was looking for this to drop and so pull back to the 98,653 region, which is our midline here. While we remain underneath this, still looking for that pullback. Ultimately, if we see its strength continue in the dollar here, that can again make it a little bit tricky for risk markets. Expect a bit of a pump in this if we do see earnings miss and we start to see that downturn in risk. And the volatility index, this can be treacherous for risk assets above 20. So do be aware of that. This thing is obviously moving up quite aggressively as we saw the flush come through the risk markets again, obviously Monday and heading into Tuesday as well. Ideal world, we want to see this below 20 and trending lower. Again, if we just take our little plus symbol here and we put something like BTC, yeah, what we're seeing here is as this starts to move lower, you can see price start to increase here on Bitcoin. Again, while it's below here, yes, we had that volatility, right? But ultimately, price is able to breathe and we see these large moves up. Yes, it was very turbulent here, but, again, the peak high for this, if we just align these just as an example, yeah, we can see as price starts to downtrend here on Bitcoin is when we're seeing this resurgence come in here in the VIX. We see the drop back here when we saw this little pump higher, but ultimately we want to see price back down below that. So do keep an eye on the volatility index as well. All right, so let's rip through some charts, see what we got. Whack, my man, how are we doing? Great to see you. Real old school soldier of TBN, but also of the show. So, okay, we take a look at that. We're now going to take a look at ETH. I think we were covering ETH with our wonderful friends over at Binance. So let's take a look at that. It's the squiggle chart. I love this chart. So many delicious lower time frame squiggles to enjoy. So yeah, I think this is, around this is a pretty key area down here with the 2,843. We do have this little smidgen of a consolidation here, and I love this little thing because it looks insignificant, but I tell you right now, I think it's powerful because when we had this mad run up here, a lot of people looking for a correction back kind of to the top of this range that price had been kind of chopping around in for a couple of months. Then we saw it coming up, and PGU just didn't get the pullback. Just set this very small consolidation here. Price tapped this and then absolutely just flew like a rocket. So, engagements back with this are really key. This is the support resistance area we were looking forward from. And it did exactly what we said did exactly what it said on the tin. Large area, yes, but supported price. Really tried for a lot of these moves. Don't worry, I know it looks a bit like a squiggly Jackson Pollock at the moment, but it will make sense on the lower time frames. We leave this on here because actually it's a really good reference chart for just showing the patience that we've shown throughout this year to position quite well within these assets based on confirmation, right? So waiting for those, that extra confirmation from the market means that we haven't been getting in as low as some, but it does mean that we've got some really nice trades out of it, and ultimately that's washed in the trading statistics. Anyway, this was green, support. We weren't looking to short this until when we closed below it, right? So then we now need this to show us some strength. Doesn't mean that I wouldn't be willing to kind of long in here. This is just a general area that we were looking to say, look, this was the consolidation before this real kind of run up here and the all-time high. So if the buyers want to protect any area, you would think it would be this. If not, well, we expect the next consolidation or the next key levels to be tested. And we've got some tests down here, and I have added some Ethereum to my portfolio because I'm happy to add it here. I'm happy to add it here. And if not, then I look for probably the flat highs of this range here to be retested, but definitely this consolidation, because look at the move that happened after it. Whoever positioned in there was major into this, or a lot of people were, and it really sent things ripping. So that's what we're watching for there. So just looking across this here, how would I play this? Well, if I want to play the strength within this here, there's a couple of areas, but my favorite for an early stage resurgence is seeing price get back above here. All right, and why do I want to see that? Well, this is the up move here, the consolidation before price swept out liquidity, took the local low as well as the swing low over here. Now reacting at this area. Now, if the buyers really are in control or remain in control of this area, then we're looking for price to get back above here. Yeah, price closing above this area is going to give us our best opportunity to push up further, in which case then looking at this consolidation here before the major drop, and once more just looking to take this level to level. I'm not trying to assume or force my will onto the market. I'm just kind of saying that, again, expecting rejection here. Maybe price does this, but as long as we're in around here, we can secure some profit, we can secure our risk. And then ultimately what we're looking for is this area to be taken out. And again, we're just staircasing our way up through these levels. Yeah, I know it looks basic and very arbitrary, but it's not. You know, these are the same principles we've used all the way back through here. So if we look at the 4-hour chart, for example, we can see a little bit better now what we've been looking for, right? Quite simply, this was the area. We can see it here. So we had the fake out to the downside, reclaimed it, not a problem. We're still below resistance. We faked out again. Look at the retests in here. Gave us some beautiful shorts. There's just this plan here, but look how much more patient. Looking for the potential of this when we started getting trapped below this resistance level was back in October, right? Not really getting any confirmation shorts through here until the 3rd of November. We were looking for this breaker here to provide the catalyst for the move up. And my God, did I think we were going to get it when we saw this beautiful expansion candle here, looking for a retest within here, and we just basically just sliced right through it, right? So again, here we're looking for this area to get reclaimed. We did. We got back above the breaker here, and we actually got some longs. Didn't participate in this. I was saying these were just aggressive intraday trades. Did work out really nicely, but you know, I wasn't involved in that because I was waiting for price to establish above here, see this consolidation, prove to me that market was getting accepted as value up here within balance, ranging basically what happened. We see the failed auction and then price ultimately coming back down to this level here, and then that is lost over here. We see price then really start to sell off and start to get back in some of these consolidations before price moved higher. All right, just to give you a little bit of context on that. So again, with ETH, I wouldn't really be looking to force the issue here on the 4-hour, but again, on the daily scale, we want to be back above this line. Yeah, we can see the consolidation that's in here. You know, start looking at these things, or I mean, do whatever you want, right? But it certainly has helped me look at these things slightly differently. You know, when I really years and years ago started to get in, you know, to really understanding how those kind of market dynamics work and how price is just in this constant flux of an auction. But if we look at this as the range here, yeah, what have we done? Well, we've deviated out the range low. Yeah. We then look for a clean retest within here to short. We just don't get that. Price climbs pretty easily back within the range. And whether you're struggling with ranges or not, one of the cleanest ways to do it is to utilize volume profiles, right? So again, if you can still get involved in the free recovery program, right? And also we're just about to open the doors for Congress as well, which starts next week. So it's our 7th annual trading Congress. We get some of the best and brightest minds in the industry to come and talk to you about everything from tokenomics to risk management to trading the range with my dear friend Trader Dank. And we've even got some other guests that I can't really just tease you enough about, but just some of my favorite people, some of our favorite people, some of the best people in the industry with proven track records, amazing views on the market. We have some incredible sponsors for the event as well. So there'll be loads of cool stuff going on. And we open up the Discord for free. So you could have extended, you could have had your 30-day recovery program and then bounce next week into another free access to the premium Discord. And the reason I'm picking that up is because we have courses on volume on there, all right? So if you do want to kind of go and take that on, then please do make the most of it and make the most of the resources, the Discord, the traders and everyone. But look at this here. This is just a thing of beauty, right? Lots of volume being transacted here. We've got the point of control, which is the red line. Now, remember, when you're drawing these, they can look great in hindsight or retrospect. But actually, as you were looking at that here, remember, before we had all this price develop, we'd already snuck out of this range. Look, hang on. Let me put that to here. Yeah, price broke out of this range here and then climbed back in. Yeah, then we look for the range high to be tested. We saw a rejection at the range higher as price obviously developed through here. We then saw this area loss. Price has now stepped back in. And if you go on here, when you've got this, you can get this to extend to the right, which takes you up to current price action, meaning that actually you've taken the volume to there. Why? Because you don't want to take the volume to here now. You've got a new range. You're understanding these levels that have been traded. We've got the beautiful close inside. Look at the absorption. Yeah, and this beautiful small body pin bar as price comes back down, this bullish hammer, showing us what? Showing us that sellers tried to take control of the market. They were ultimately absorbed. Price came back into here. The aggression now is with the buyers. So an early stage recovery for me would be price getting back above here, creating a fresh area of demand. Yep, sorry. Right, creating a fresh area of demand here, and then looking for this to be retested. But ultimately, look, if we zoom out, this is still aligned with the daily plan, and I would feel better seeing that daily close above this area. Then we just want to get above the value area higher here, so we can see how these two things overlay. So that's a really clear plan there for ETH. So we're going to finish up, and my God, I think we're actually going to finish in time today. Take a look at Sol. Where's the squiggle chart for Sol? Here we go. So look, really, really similar. I'm glad this is on here, actually. Let me just do the same thing with this. Let me just extend this across to the right. Yeah, this is going to, oh, no, it won't work with it. So all you can do here is you just get this, add it to the line, move it across, placate the ADHD and the OCD by making it the same color, and here you've got it, right? We saw this initial breakdown of here, price tried to step in, then when we came back out again, like this over or under over pattern, just think about this, right? So the last analysis we were doing here, we were looking at this consolidation here to be tested if we got this confirmed range breakout. We saw price breakout from the range. Then what we're doing is, remember, we're waiting for these consolidations after the breakout, to see if the auction's accepted and price is willing to move on. Ultimately, we got the failed auction in here. Price broke back down. Then when we got back inside the value area high, or the range high, we then trade down to the point of control as your first target. That's where the highest volume has been transacted, and then we look for the range low to give us opportunities to step long. This would have, I didn't take it, but I would have been more than happy trying along this here. Price stepping back inside, nice retest of this going up. When that failed and closed outside, just be logical with yourself and don't forget to make sure you're marking up the key areas. Yes, that's great in terms of a range, but we haven't actually recovered anything in terms of it being key bullish territory. What we would need to see is this area of supply or bearish order block here when closed underneath. The retest of this is where we're selling off to. So again, seeing price above this here from certainly from a perspective of looking to step into those orders would be fine. But then we're right at the value area higher. So again, I still think this is the best area to wait to see this reclaimed from here. Ultimately, we've now got a whole new one of these to step into. Okay, so price broke down. We've got this to the downside. So again, looking for this consolidation here. And I do like this area, right? This is where I'd be looking to see him. Here's the consolidation. Price flushed out to the downside, trapped loads of late sellers there. Then it stepped back into the range here. Now we want to see it break out this side, right? Again, if we look to add a volume profile on here with all the information we've got, we can see this and we can add in the value area high. So again, looking for price to establish itself above here. Nice momentum holding this in here and then stepping up. That would be the play for me. Craigie boy, BC rant next week after Rachel Reeves' budget. Looking forward to it. I don't even pay any attention to her, mate, to be honest. I know the country's doomed, sadly, but yeah, that will definitely give some good rant material. I'm just about to finish on time as well. Maybe you could open a thing on Poly Markets, Craig. You guys can start betting on how long in these shows I managed to rant on for. I reckon it's about 60%, to be honest. So I try to keep it 50-50. But yeah, awesome, mate. If you're heading off now, I hope work doesn't get in the way. I hope you have a wonderful week. So yeah, really simple play here on Solana. That's what I would be looking for. So we're just going to finish up on FET as well. Hopefully we've got a nice clean chart on this. Oh, not clean, but it's not too set. I mean, look at this SR level. Just deviated out. And then when it did drop, look. And this is why when you see these kind of deviations and that, right, you can play the kind of candle retests of them. Again, look, this one we were trading this because we had the value area, right? And then we saw the retest of this, kept getting rejected. So that was a decent short, right? However, still wanted to see price really reclaim this. So within here, again, decent bounce to begin with. When we come back to this area again, set a lower high, then we break down back below this area. What do we see? Well, we see the opposite occur here, which is, the low of these areas here, this consolidation becomes then the bearish kind of breaker. It's not, you would trade it more off of the new formed supply when you got the close below, but the rejection down here, key liquidity targets lower. So as we look at this here, what are we now looking at? Pop ourselves back to the daily. Well, good reaction here at our key level, right? We came in this wick down in here. I like 0.177 here on FET. It was a great flush out. Buyer stepped in again, very similar to what we saw like with the BTC candle. We saw something similar on ETH. Again, we're looking for these areas of consolidation denoted by the bullish candles here for price to get back above it, showing us that changing dynamic. We didn't see it down here. In fact, the first place we saw it was here. Yeah, and just look at that. Why? Because this here, the area, sellers took control of the market, but they're very quickly caught offside. If they're holding through that drawdown, any retest of this area or region whereby you can then mitigate, you can get yourself out of that position, is more than likely going to be taken up by people. All right. And now we're in here. It's like, okay, I like this expansion. I like the fact that we're holding this inefficiency here, this fair value gap. So as we're around here, what are we doing? We're holding this. We just want to see this here. We can also see that we've set this newly formed area of demand, right? Small, not saying it's going to save the world, right? But ultimately we did take some local liquidity here. We are reacting at this gap. We tested back into this consolidation that led to the drop. So this could be looking good. I like the narrative behind FET. Obviously, in terms of AI, we've got some local liquidity that's been generated down here. So if we look at this now on the 4 hour, beautiful drive back in, same principles, right? What did we do? We came back in. Here's the up move before the sweep of liquidity. So we mark the high of the candle. This gives us our breaker or breaker line. Strong move above this. I wasn't involved in this 4 o'clock this morning, but this would have been a great area to look for some potential long positions. I wouldn't be rushing in for this here. I would actually be waiting at the moment to see if we get the close above this 4 hour here, because I really like the look of this over here. You've got liquidity here. If you get a 4 hour close here, you could look for, get a nice close here, pullbacks to this area, and then on the lower time frame, you can look to long. If you see weakness and price driving too much into here, wait until it shows you strength again, especially in these market conditions. They have been treacherous. DM4508. Okay, mate, just for you. We will throw XRP, but this is going to be our last one, ladies and gents, for the day. I don't think I've got anything on here, actually, have we? Yeah, we have. We got the short. Obviously didn't quite get this retest, did we? Look at this. So we're looking for this to come up. So I remember this really well, actually. So again, really holding this area nicely. When we got the expansion above here, look, similar principles to consolidation before the run on liquidity. It wasn't this. This would have been traded off the order block or the newly formed demand because we didn't run the low. All right. So price getting back above here, driving to this area. That's the area I was looking to position for longs. That got absolutely wrecked. Was then looking for a retest of this. That got absolutely wrecked. And then we came through to here and came within an absolute gnat whisker of taking that level before the shorts came down. But, yes, yak, yes, as our Polish friends say, look at the wick on that beast. Very, very happy buyers down there at 0.7782. I imagine probably a lot of people that didn't have necessarily direct access to that market at that time. So as we're looking here, again, similar principles. We've got this drop now. So this here is the area of consolidation. A little bit treacherous to take it off of that low, but let's take a look. That's not too sad. All right. I think this is a pretty solid range here, but unfortunately what we're looking at here looks like we're losing this range. So the point I would be looking for price to get some kind of reaction at would be here. So that's down at 2.0674, or for price to step back into the range here and close us above 2.2179. All right, creating that newly formed area of demand. Yeah, ultimately, sellers are in control of the market at the moment. We want to see this area created, price drive back above this, climbing back in the value area low, so back in the range, and then again tentatively looking at this level to level, all right, and then trading this above. And that is, it looks like BS, right? But that would be a reclaim of the point of control. This would be a confirmed range breakout. Wait for price to spend a little bit of time in here and then look to take the breakout trade to the highs. And then obviously we just have this level here, which has been so prominent for price and all the support through here. If he does go a little bit lower into this, as we see it supported these highs as well. But in terms of what I'm interested in locally, that is the key. All right. So hopefully that wraps everything up. I wouldn't really drive this down onto the 4 hour, to be honest, just because that's so clean. If you are looking from it from intraday perspectives, then I again be looking for breakouts above this high or below these lows here. But do be careful of this. I think could see a lot of resting orders down there. And ultimately how price reacts with that is probably going to be quite key. Like we saw here with the value area low, retested this kind of area here. And yes, I know for people with volume, and that probably would have been slightly different here, but you can see the reaction here at some kind of low, either that local low, which it failed to displace against. Absorption stepped back in the range, obviously didn't give much of a trading opportunity here because it flew straight to the point of control. But look at the difference in terms of this. the weakness as we saw price drop into here. We then saw price come above. There's no strength in the candle that reclaimed this. Then when we step back outside of it again, sensible to then expect this consolidation here to represent further resistance and be driving lower. So locally as well, we want to be aware of the low down here at 2.1089. All right, legends. So do keep your eyes peeled for some updates about Trading Congress. All right. And if you want to follow me, you can find me on Twitter here at BC_Richfield. You'll find all the updates from Congress on there, as obviously you can come across, and follow the fam at the Birb Nest as well. And we look forward to welcoming you all next week. This is the last live show of the week, I believe. Might sneak one in tomorrow. We'll see what the markets give us after FOMC. But don't hesitate to reach out. You can reach out to me on Twitter. I'd love for you to come be part of our amazing community over at the Birb Nest. And again, you can get access to that for free at the moment. Come and check it out. Come and absolutely blitz through all the resources. You've got courses, you've got trades calls, you got everything that your heart desires over there to get you back on track, or to just sharpen up your edge if you're somebody that's actually been doing okay in this market. All right. Apart from that, thanks once again for joining me. Really do appreciate each and every one of you that comes onto the show, and I wish you all the very best for the week ahead and hope to see you all around the nest. Take care, legends.